Good afternoon. Topic of discussion today is going to be the Las Vegas real estate market update for March of 2013. This is Dale Snyder with the Snyder Group at Keller Williams Realty. Let's jump right in. The biggest change we've seen is going to be the inventory. As many of you know, it's just been ridiculously low. We normally see about 17 to 20,000 units on the market for sale. Right now, as of today, we have 3,991 single-family homes, townhomes, and condos. I decided to include those in my new updates. I was just doing single-family homes before. On the market, so about 4,000 units on the market for sale right now, of which 10% are bank-owned, 15% are short sales, and 75% are traditional sales. This has been a huge shift in the market. It used to be about 10% traditional and about 70–80% or so REOs, and then maybe 10–15% short sales. So a huge shift in the market. I'm going to tie back into that in a moment. But as far as homes in contract, meaning the buyer and seller have agreed on price and terms and we're awaiting that property to close, there's 12,855. So those of you searching online thinking that there's a bunch of homes on the market, there really isn't. There's only 4,000, not 16, 17,000, which a lot of these search engines show. In February, we saw 3,093 units sell. There's a correlation between the amount of inventory available and the amount of closings. If we had the inventory, we'd be selling 5,000 to 7,000 units a month. But we don't have the inventory, so that's why there's been a decrease in the amount of closings. Our inventory has dropped 10% in the month of February alone, a 10% reduction. At this rate, it's going to be very interesting to see where our inventory levels are going to be by summertime. We're not even in the peak of our buy season right now. Tying back into the inventory. So if we only have 15% of what's available being short sales, here's the pink elephant in the room. They're saying there's around 40,000 vacant homes in the valley and about 100,000 units left to go through the foreclosure process. These numbers fluctuate from 60,000 to 100, so somewhere in that range. Notice of defaults, they're on the rise. They were pretty much stopped back last October due to AB 284. The link, there'll be a link after the video and at the bottom of this video for another video explaining AB 284 in detail. But basically it stopped the foreclosure process. So in February we saw about a 300% increase in notice of defaults. That's 1,400 to 1,500 notice of defaults, one in about 400, 500 homes in the valley getting a notice of default. So at some point this inventory level is going to have to come back. So let me tie this back into the short sales. If you're living in your home and you're not making payments, how likely are you going to be to want to cooperate with a short sale to sell your home if you're saving several $1,000s a month to live in the house for free? So that is why we're seeing such a small amount of short sales, and the banks aren't foreclosing. They're pushing the short sale. So we have a false low inventory. This is going to come back up at some point. When? My projections on it is, if you look at the notice of defaults filed today, those are not going to be properties coming on the market until the fall approximately, or next year if they go through foreclosure. So I really don't see inventories going up until the spring of next year. Because keep in mind there's a moratorium on foreclosures during the holiday season as well. So they're not going to foreclose during the holidays. What's my professional opinion on this? Inventory is going to stay at the low levels it is right now. It might go down a little bit, it might go up a bit, but we're going to stay at ridiculously low levels, about 1 to 1.2 months supply of inventory. Prices have gone up 20 to 30% in the last 12 months. I'm going to finish with a few stories of examples of listings of ours that validate this. Prices have gone up as much as 10% this year already. And I project we're going to see another 10% or so. So prices are probably going to go up another 20%. So some of you may see as much as a 50% appreciation rate on your home. Sounds unbelievable, right? Well, if you look at the cost it is to build the product and how ridiculously cheap the homes were, it makes sense that the prices should snap up at a pretty good level here. Maybe a 20 to 30% increase in appreciation. But 40 to 50, there's a lot of real estate professionals and people talking about the real estate bubble coming. So if we do see another 20% on the 30, then yeah, there could be some slip in the pricing, absolutely, in 2014. Projections are definitely a shortage of inventory to continue, multiple offers on everything, which is going to make this a very challenging and frustrating market for many. So let me just quickly touch on buyers and sellers. I do have a video that I put together for tips for buyers and tips for sellers in the current market. I didn't want this video to be 20 minutes long or to be a 3-part series. So you can find the links to the buyers' tips and the sellers' tips at the bottom of the video or at the end of the video as well. So buyers, in summary, if you're not paying cash and you do not have the capabilities of waiving appraisal or waiving financing or paying at least 5 to 10% above appraised value, you're in for a challenge. You're going to want to make sure you're partnered up with the right real estate agent that's very aggressive, knows the market, and has a good network with a lot of the agents. And you're probably going to want to have to go after a new construction, the few short sales that are out there, because a lot of these homeowners are emotionally attached to their home and they don't want an investor buying it. Or going to HUD homes. We do sell a lot of HUD homes, and that's definitely an opportunity for you as well, or a Home Steps property. There's a lot more involved with the buyer side, so watch the other video if you are a buyer in today's market. Sellers, this is an opportune time for you to capitalize on the market. If you've been waiting for an opportunity to move up, move down, leave Vegas, this is could be the opportune time for you to capitalize on this market before we do see more of these distressed properties come back on the market. If you're a seller, please listen to that video. I touched on a lot of pointers that I think would really help you. So in summary, the government and the banks are controlling our inventory. There's not much we can do about it other than project what's going to happen based on the notice of defaults. That's an indicator that we track daily. So if the market's being falsely controlled, the only thing that you can do is keep a pulse on it and try to capitalize on some of these governmental and bank restrictions being put on the inventory. Okay, so the links here are some very valuable information. If you're considering buying or in the market, make sure to listen to the tips. Some great valuable information. Considering selling, don't miss out on those seller tips. Very good nuggets for you that I know you're going to find value in. If you're considering investing, make sure you don't miss out on this investor update. I'm very clear and to the point and direct with things, as I know you investors can appreciate. AB 284, I touched on that. If you don't fully understand it, make sure you click on that video as well. I hope this information was of value. If you'd like to have a more educated, informative conversation, reach out to me. I'd love to talk to you about this. I'm very passionate about what's going on in the market. If you like the video, feel free to share it, make some comments about it. Have a fantastic day. It's Dale Snyder with the Snyder Group, Keller Williams Realty, giving a March update, Las Vegas housing market 2013.